We are going to start with the last of the FAANG names to deliver their results. That, of course, is Google. Its parent company Alphabet dropping, though, after reporting numbers. Josh Lipton out in San Francisco with more. Josh, why the 5% haircut for Alphabet tonight?
So, Brian, just spoke with CFO Ruth Porat on this brief media call. I did ask her about this revenue miss. So the company beat on the bottom, but revenue came in at $46.1 billion. Street was actually closer to $46.9 billion. There was this shorter holiday period this year. I did ask Ruth Porat any specific challenges or headwinds that maybe investors or analysts should keep in mind. She did say that, listen, in her opinion, they continue to be very happy and pleased with what she describes as ongoing strength of the company. Called out that she was very pleased specifically with cloud momentum. Hardware, she said, did so well over the holidays, but it was compared to a stronger report than last year, perhaps suggesting some tough comps there. Company did provide some more disclosure, new disclosure this time around on search, on YouTube ad revenue. Porat saying that was a $15 billion business in 2019. On the cloud business, too, some new metrics there. Porat saying that ended 2019 on a $10 billion annualized run rate. So what to sort of make of all this? I just got off the phone with Aaron Kessler from Raymond James. He covers the name. I want to get his response. He did note that besides revenue, operating income also at $9.3 billion did miss his forecast. Investors, and here I just asked him about these new disclosures. He said it might have actually thought YouTube ad numbers were a bit higher than reported. And finally, cloud, again, that $10 billion annualized run rate. They broke out $2.6 billion for the most recent quarter. In Kessler's opinion, cloud, that disclosure, those numbers, not a big surprise in his opinion. Of course, Google's rivals in this space, Amazon, Microsoft, recently reporting strong cloud numbers themselves. This call is just kicking off, and we'll bring you headlines as they come. Brian, back to you.
All right, Josh, thank you very much. He's going to hop on the call. And, Josh, be sure to flag us for anything that you hear that is interesting, newsworthy, or stock moving on the call. Guy Adami,
yes,
this
sir.
is a company that you can be disappointed with the revenue growth, I guess. Their quarterly revenue last quarter was greater than their annual revenue less than a decade ago. Incredible number.
You know, and Karen can speak to this a lot more intelligently than I can, but I'll say this. People are looking at the revenue number. I get it, and the stock's had a huge run, probably for good reason, given what we've seen with some of these other stocks. So just take that broader revenue number aside. YouTube ads were up, I think, 30% year over year, and Google Cloud, which is probably 5% of the overall revenue, is probably up 55% year over year. You still have a very reasonable stock in terms of valuation. And this pullback, I guess, sort of makes sense given the run it's had. You just got to figure out, I think, at this point, where you want to re-enter. I don't necessarily think it's going to stop here. 1350, if you look at a chart, makes a lot of sense to me.
Well, the 50-day moving average is 1378 or so. So I agree with your numbers there. What happens if the YouTube income or the cloud business is what we're listening to right now doesn't impress the street? Everyone wanted more transparency, but maybe be careful what you wish for is my thought process in this. So maybe it's a sell signal to me. What do you think as far as the numbers?
I mean, the revenue was disappointing. I like the clarity because I think they weren't getting as much value, as high a valuation as they could for some of these businesses. I also like the idea of them being more aggressive with their capital allocation. So we saw a big increase of buyback, $18.4 billion for the year. I think it was a little over. It's about $6.1 billion for the quarter. They can even do more than that.
Would you like to see them do more than that?
I would like to see more. For a long time, and they've picked it up a lot. But when you think about how Apple did an extraordinary job of not just using their balance sheet, but also selling debt at, I don't know, 37 basis points, right? And using that to buy back stock, that worked tremendously well for them. Google has enough cash flow, Alphabet has enough cash flow to do that as well. But the revenue was a little bit disappointing. I think the stock ran up on anticipation of more transparency and that the street would like the transparency. So it's sort of giving back all that plus some.
Yeah, I think it's a function of where it came from. Obviously, today, if you just want to look at it on a very micro level, the stock was up 3%. So it's giving all of that back and then some. I think you want to go back to November. The stock broke out. It was a massive breakout at 1,300. That was the 2018 high. It was the level it topped out earlier last year. And then you think about where did it come from over the last 6 months? The stock had nearly touched 1,000. in early June, and then it nearly touched 1,500 just last week. So you think about this, where this thing is, it should go back to Guy's number, 1,300. That's the breakout level. That's where the stock has support. That's where there's probably some valuation support. And I'll just say the one thing, not a whole heck of a lot changed between June and then the time of the reporting their Q4 and basically the full year of 2019. What happened is multiples expanded. So here's a company that is growing, to your point, Sully, you have $150 billion in sales, growing 17% year over year. That's astounding, but it is.
But you're looking for that multiple expansion based on those numbers that they disclosed today.
That's right. I mean,
and maybe it's not enough to expand it the way, but I think you brought up an interesting point. Being November where they broke out, October is where they missed. The stock fell 6%. So I think to fall again 6% is the 50-day from the recent top. That gives you that number again.
Coming into after hours, Guy Adami, the stock was still up 11% this year. I mean, to 3% to Dan's point today, 7% before that. So even with this drop, if it holds, this will still be a stock that is higher this year. With all these coronavirus concerns that we have got, is this a relatively macro worry free, insulated.
Yeah,
thank you, stock.
You're welcome. Steve talks about this all the time. I mean, 65-70% of all stocks are basically correlated to the broader market. And if you believe, like I do, that there's still another downdraft, the answer is no, it's not going to be insulated. But if you think we're in this benign area where this coronavirus magically goes away, which I don't think is going to happen, then I think the 1350 level, which Dan mentioned, that's sort of where we broke out from in the middle of December. That makes a lot of sense.
But, okay, so connect the dots. And if this is wrong, Guy, please say it. Coronavirus is impacting the equity markets theoretically because China's going to slow down, impacting that big growth engine and consumer spending, possibly with U.S. companies that rely on China. Fair enough. Google is a company I don't believe in any way that relies on China or mostly consumer spending.
Well, but hold on, Sully. I'm just going to interrupt here. Where do they make most of their money? 90-some% of advertising. Advertising is the most cyclical sort of business. We just haven't had a recession in 10 years. You don't remember what it looks like when people cut ad budgets. Talk to anybody in the TV business. They know about it. Now, obviously, there's a massive secular shift going on towards offline sort of stuff, but we haven't seen a material slowdown. What people are worried about is when this operating expense number and the percentage gets too high, close to that revenue number, and then you kind of go this way, that's when you have a problem with a stock that has $1 trillion multiple trading at 27 times.
All that is extremely granular, extremely educated. But when we look at the stock, it's traded 2/3 of it basically was on search. And then it went to the political antitrust issues. And now we're in the realm of it's about cloud and it's about the quote unquote other businesses. So we have to decide tomorrow whether it's due a multiple expansion or continued multiple expanded based on these results.
$8 billion, we'll call it $9 billion in cloud revenue, but that looks like not much compared to AWS. Are they losing to Amazon?
They're not only losing to Amazon. So the problem is that they're going after cloud business. Google is going after Amazon's cloud business, but Amazon is going after Google's search business. So it winds up a lose-lose after these numbers are released for Google, in my opinion.
Yeah, I will say, Dan, I'm on the counter side of the TV side. I hear what you're saying, and I get it. But the YouTube deal, which, by the way, could be the smartest deal of all time. I mean, you look at the numbers, whatever they paid, $1 billion. It's probably a $100 billion business. Isn't it kind of counter TV cyclical? I mean, is TV maybe, slows YouTube TV, which, by the way, sponsored a segment of the Super Bowl last night.
Yeah, and maybe you tell me what percentage of the YouTube TV is going to be recurring, and are they making money on that recurring revenue, and what is the ad split? I mean, we just don't know. I mean, these businesses are huge black holes. They have 7 properties that have 1 billion plus, monthly active users. It's massive, right? But I think to Steve's point, ultimately, at some point, it's a bipartisan issue that regulators will come back for all of these companies. They have too much power.
You want to see Sundar Pichai start to give us a little more insight, granular into these numbers? Inside these divisions?
I do. I mean, just the fact they broke them out that's a big step for them. I mean, they used to break out nothing, right? And I think, Ruth Porat was a very important step, and now Pichai taking the reins. Hopefully the evolution continues.